Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is a morning market prep video for May 25th, 2022. Well, yesterday we were able to squeak out another gain. 2 days of gains in the Dow. Can you believe that? 2 days in a row. And but it really wasn't all that impressive considering the fact that we were at one point down over 500 points and we ended up just barely squeaking that out right at the end of the day with a last minute shove. So what does that mean for today? Well, how about we settle in, let's buckle up, let's get ready for the hump day edition of the morning market prep video. Good morning once again, and thank you so much for being here. I do truly appreciate it. You know, this has been a very, very challenging market, and unfortunately, the hits just keep on coming. And we have some things today that could move us substantially, and it's just impossible to know whether it's going to be an up, down, sideways, or all three on the day. But let's take a look at the technicals of the chart and see if we can get some information about how we might want to approach the market for this morning. Earlier this morning, we had futures higher, and overnight futures were pushing on up. But unfortunately, now as we head toward the market open, we're showing just a little bit of a pop and drop here. We pushed up earlier, pushed up into that downtrend. You can see a little bit of bearishness here in the market, but that could certainly all change here this morning with the data that we have coming out. So let's take a look here in the chart. We do have resistance above, and of course that downtrend. If those bulls can find inspiration, we might finally be able to push through there, maybe pop that downtrend. But we'll still have to be very cognizant of all the resistance above in the chart. If those bears find reason for inspiration, let's take a look maybe right down through this area right here. It really wouldn't be all that hard considering how many points we traveled yesterday to see that possibility that we could break back down below those lows. So if we're going to have to hold our breath this morning with the data coming out, whether or not it's going to inspire those bulls or those bears. Now, our technicals in the chart continue to deteriorate. We have our short-term moving averages. This bouncing around that we've done in here has allowed our short-term averages to kind of catch up, and we're creating this substantial price and technical resistance area here in the chart that we're going to have to work through. And boy, your guess is as good as mine as to what happens as the data comes out. We'll talk about that in just a second. Now, unfortunately, while the Dow was able to squeak out a second day of gains, SPY was not so lucky. It did recover substantially off of its lows, but it did not have that opportunity to come back. In fact, it erased most of the day's gains on Tuesday. As we whipsawed and bounced around in here. But there is some good news here. First off, if we take a look, there's our downtrend, and we are kind of consolidating out toward that downtrend. And the good news that I can deliver here is that we at least held these lows. So fingers crossed that those bulls can find some inspiration today. If they do, we might challenge this little price resistance area in the chart and maybe even have that opportunity to break that downtrend here. However, if those bulls don't find the inspiration, if it is the bears, you can see pretty easily it wouldn't be a big stretch for those bears to push us right back down through this level in here, potentially even creating a new 2022 low in the SPY. So a lot is on the line here for those bulls if the data continues to give us some problems. So watch that closely. And of course, we're looking at a little bit of a bearish open this morning, at the moment anyway. Now our technicals in here also continue to decline. Notice that our 20-day moving average is about ready to cross over the 500-day moving average, creating a pretty substantial level of price resistance in the chart right through that area. So we've got a lot of work yet here to do. Our QQQ, yeah, boy, NASDAQ had a rough day yesterday. And as you can see here, our QQQ pushing on down yesterday, but had a substantial bounce before the day was over. And we're still below our downtrend. We still have substantial resistance levels above in the chart. And right at the moment this morning, we're kind of clinging to the lows. So it's going to be pretty critical here. If those bulls find inspiration, we could push on up here, maybe challenge that downtrend, challenge some resistance. But it would be not much of an effort at all on the bears' part to drive us into a 2022 low if that data that comes out this morning disappoints. So keep an eye on that. And our technicals here continue to worsen. You know, I've been talking about this 50-day moving average getting ready to cross over the 50, and you can see probably by tomorrow, 50-day will be crossing over the 500-day moving average. Not a bullish chart does that make, and as you can see, our shorter term averages once again are providing quite a little resistance in that chart above. So not the best situation here for the NASDAQ. If we take a look at the Russell, now IWM had a nice recovery yesterday from its low. As you can see here, we pushed back up here in a nice little hammer pattern, but well, the question is, can we follow through to the upside? Our downtrend is still in play. If we can find that bullish inspiration, I would maybe look to this area for that resistance to see whether or not we can pop up through there and maybe break that downtrend. And I would also tell you that, same as the NASDAQ, it wouldn't be a real big stretch for the bears to grab a hold of this and maybe break that down and even that possibility of new lows on the year if those bears find inspiration. And technically here on this chart, brutal. 50 is already crossed well below the 500-day moving average. Our shorter term moving averages crossing down and creating substantial resistance levels here in the chart. If we take a look at our VIX, now interestingly enough, our VIX yesterday, well, it didn't show an awful lot of fear, which was kind of odd. But maybe we're just getting so tired of the bearishness that we're trying to ignore any of the bad data. And that happens sometimes. We just kind of get worn out from all of the selling and we rally despite what the data says because we're just tired of the selling. And you can see right in here, we're kind of holding on to an upside trend here in the chart. We also have this little downside trend. So we get this little pennant or wedging pattern focused in here. And as long as we can kind of hold on in here and don't see that fear really spike, we may have that chance if we can find some bullishness today, if we get that inspiration for the bulls, to push us down toward that 25-26 handle of support. And as you'd seen over here on those drawings I have, that's a real substantial level that runs across the chart for a long ways. Now, if those bears find that inspiration today, we certainly have that possibility. We could push on up and break that little downtrend. And my worry here is if panic starts to come in the market and we start breaking above these levels up here, 37, 40 areas in the VIX, I think it'll be a substantial change as to what the institutions will do. And we could really see maybe that capitulation event happening in the market. Let's take a look at our T21.22. Now, our T21.22 yesterday was pretty interesting in the fact that we were all the way up here And then that selling came into the market, and when we were 500 points down, T2122 was right back down here in the bullish reversal zone. But well, here we go again, unable to hold down here on the bear's part. We whipsawed back up, mostly in the Dow. Obviously, we did have nice recoveries in the other indexes, and we pushed this back up. So what does that mean? Well, it means if we find some reason for bullishness, that we have plenty of opportunity to move to the upside if we can find reason for bullishness. But it also shows us that because of that whipsaw yesterday, that we have relieved some of that selling pressure. And if the bears find inspiration, well, there it is. There's our target again, right back down there at the bottom. That is certainly possible as well. So be prepared for just about anything today, depending on how that data comes out. Now let's take a look at our T2108. Now our T2108, doggone it, it was just a punt yesterday. Back and forth here, we ended up closing basically flat. Only, less than 19% of our companies holding above the 40-day moving average. That does not make for a bullish chart. Certainly, it is so oversold that gives us that hope that maybe we get some relief from that oversold condition, but does not make for a bullish market condition. And if we take a look at our T2107, we have a very similar situation. In the fact that we were just basically flat on the day. Now notice we've got this little tiny uptrend trying to happen here, but our major downtrend and lots of resistance above that we still have to deal with in the chart. So again, 22% of our stocks holding above the 200-day moving average. So not a bullish case, but hopefully, maybe it's so oversold that we get a little rally as long as the data doesn't pound us on down. And our T2101 did turn the corner just a little bit, spiking back up, and that gives us that, probably because of that selling early in the day, that turned us up here a little bit. We did get a little bit better volume in the diamonds yesterday. Notice we popped up higher here with that back and forth in it. But if you take a look at the SPY, our SPY was relatively weak. Our QQQ volume, relatively weak, and IWM also. So I think our T2101 is still just uncertain where the momentum is here in the market. Now with that, let's take a look at our economic calendar for today. Now our economic calendar, first off, we've already got our mortgage application numbers out, and our mortgage applications to continue to decline after that whopper of a decline last week, coming in at a negative 1.2. We can see purchase index did improve ever so slightly by 0.2, and our refinance continuing to fall. So clearly banks are running into trouble as these rates go up, and it's seeing a substantial decline in demand for mortgage applications. And we saw existing home sales yesterday decline sharply, suggesting that. But what was interesting is home prices continue to go higher. So as home prices, oil, and food continue going higher, that rate increase that we saw last month and the rate increase we're expecting this month, at least at this point, has had no effect on inflation. And we continue to see those numbers go higher. As a matter of fact, we had national gas prices hit another new record, just marginally, but we're up to $4.60 average on our gas prices, as we saw oil and gas continuing going up yesterday, food prices surging back yesterday, and then we saw those housing prices continuing to go up. So an interesting situation here for the Fed to try and deal with. We either need a substantial decline in the market, demand destruction needs to occur here to bring that inflation down, or the Fed is going to have to become much more aggressive in raising rates to slow the growth of that inflation. Now, if we take a look here the rest of the morning, we've got durable goods orders here coming out this morning, and that certainly is a market moving event. Now, consensus estimates suggest that that will decline, but I think the big question is, we've been seeing a lot of these consensus estimates kind of putting a warm glow on the estimates, and then we've been missing them substantially. So if this number comes in and we come in close to the estimates, we might be okay and see a little bit of bullishness there. If we happen to miss substantially, that could be a problem. So watch that closely. That comes out before the bell, and who knows what the market's going to look like after that happens. We're going to follow that with petroleum status numbers. We know that that can have a major effect on how those oil sector companies trade, and so far we're not seeing any help from our administration to improve that, and no help from OPEC as well, no matter how much he begs for that relief in those oil prices. And as you see, we've got another Fed speaker here, and then we're going to be waiting on the FOMC. You might want to keep an eye on these bond auctions, but FOMC minutes, it's pretty typical that we kind of get a lollygagging market where we just kind of drift around and chop around as we wait for that news, and then we get a spike of volatility. I doubt we learn anything more with all of the Fed speak out there, but there you have it. And then as you prepare for tomorrow, if this isn't enough to kind of give you some heartburn, well, we're going to do it again tomorrow morning with a GDP number that may be problematic for us here, so watch that close. Then on our earnings calendar, we have an interesting day on the earnings calendar with relatively light on that calendar, only about 35 companies listed, with only about 20 companies that are actually confirmed. But after the bell today, we have a big notable that is certainly a potential market mover, and that would be NVIDIA. And you can see NVIDIA has been moving down, and we're down here testing the lows in the chart. So your guess is as good as mine. Seeing how tech has been responding here lately, I wouldn't want to gamble here that it's going to be a great report, but we are so oversold or so sold off in this, perhaps even a marginal report can get NVIDIA to move, and this is and can be a market moving report. Other than that, we have an awful lot of retail continuing to come in our calendar today. We're going to hear from Box. We're going to hear from DKS. Looks like DKS has disappointed substantially this morning. Retail is just getting hammered here as the consumer, really continues to show weakness in the damage of inflation. And unfortunately, I don't think that inflation is pulling back yet. If we look at DY had a nice little pop here this morning to the upside, so keep an eye on DY. EXPR reporting today. Looks like it's bouncing around here this morning, trying to get a bullish move here, recovering from yesterday's ugly selling from yesterday. And if we take a look at SPLK, not much going on there just yet. We've got WSM that will be reporting today. VSAT is reporting today, and ZTO will be another on that list. Now, keep in mind, I didn't cover all of them. If you want that full list of notables, make sure you click the link just below the title of the video. That'll take you back to the morning blog where you can get that full list. So let's take a look at some stocks that could be setting up. But before we do that, guys, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click click that subscribe button on YouTube, and then also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful and helpful, if you could please click those thumbs up buttons, leave a brief comment. I do try to answer all of those. I do read them all. That you are important to me, and I want to answer questions if they do come up in there. So thank you so much for everyone who does take the time to do that. And also thank you to everyone who does continue to support the channel through the Buy Me a Coffee link just below the title of the video as well. Let's take a look at a few charts, and remember guys, these are not recommendations to buy or sell any security. As a matter of fact, you're going to have to do your own due diligence and never ever blindly follow anyone else's trade ideas. And what you probably should be doing is making sure that you're following your specific rules and your specific strategies to trade the market, because boy oh boy, this has been a challenging market environment. Let's take a look at a couple things that have been kind of interesting. We had a ugly sell-off in some of these defensive sector stocks, but they have surged right back up to the upside. And if you take a look here, Coca-Cola breaking back above some resistance in the chart. And although that we have some resistance right here to deal with, any kind of rest or pullback that holds a higher low in here could easily set up a long opportunity. So you might want to keep that on that list for that chance that it does hold that higher low. We also saw really good moves like PepsiCo pushing back up. Now again, price resistance in the chart that we're going to have to deal with, and it is entirely possible that this rally creates a short. So watch that closely. But it's interesting that we've seen so many of those perking back up. Take a look at like Philip Morris yesterday. Nice bounce here in Philip Morris. We're holding on to this upside trend here in Philip Morris. Let's keep an eye on that possibility that we could push right on through. We're breaking through some resistance. We could push right on through and hold. I wouldn't rule out the possibility of a little resting pullback, however, before it goes. So keep an eye on Philip Morris. We saw Altria recovering pretty dramatically here as well. Now this could still set up short. As you can see, we're still in a downtrend, banging our head into this resistance. So this has that potential. It could go either way, where we could rally or we could fail right here. So could be a short trade as well. Take a look at stocks like FedEx. FedEx had a pretty good rally back yesterday. This doggone thing just looks like it could fail. When you see a major resistance level in a chart like this, that possibility that we could fail from this area, it does show that potential. But at the same time, if we could break back through and hold up here, we may have that opportunity to move on higher. I would continue to keep an eye on these oil sector stocks. You know, when we look at like ExxonMobil, very strong, continuing to push higher. You guys know I'm holding UNG. I couldn't be happier with this trade. I've been holding it for a long time. The percentage gain in this is just almost embarrassing, how strong that trend has been to the upside. If you take a look at ConocoPhillips, very strong, making new highs. We're seeing a lot of these oil and oil sector stocks doing very, very well in the market. Now, something kind of surprising that happened yesterday is we saw a major surge in utilities. Now, I don't know what created that yesterday. It was just kind of odd. Just all of a sudden, utilities just took off to the upside. So XLU, big spike yesterday. And if we take a look, if we jump into some of the stocks that moved, take a look at how big these moves were in some of these stocks. Big breakouts, big pushes through to the upside, and lots of potential longs here in those trades. So watch that closely. Last but not least, guys, if you are a long only trader and don't want to short the market, then please keep an eye on these inverse ETFs, because they continue to show these upside trends and continue to show these opportunities for more bullishness in these inverse trades. So keep an eye on stocks like QID, SH. There's just a whole bunch of these showing lots of bullishness and actually setting up potential new entry signals here along the trend. So watch those closely if you just want to be long only. So with that, everyone, I want to wish you all a fantastic day. Be very careful today. Anything is possible with this data coming our way. Don't be surprised if we see more whipsaws, pops and drops, and very, very challenging price action for the rest of this week as this data rolls out. I want to wish you all the best. Stay safe. And we'll see you right back here bright and early Thursday morning. Take care, everyone.